All right, welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thanks for joining us here today. Lots to talk about, lots to get through. Yeah, that term, let's unpack this. I think I use that too much, but that's the term of the year, it seems like. But let's see what corn's got for us, and we'll unpack this. How about that? Let's see. Corn's down 3 1/4 cents. 6.89 3/4. No, only down 3 cents. 6.90's last. That's 5 cents off the lows, 6 cents off the highs, and we're going to call that in the middle of the day's range, right? Soybeans, what do we got going on over there? Soybeans, this is post WASDE, are down 9 1/4 cents. 13.86 3/4 is last, and that November. We've got a 13.96 3/4 price in Jan, and that's down 8.5 cents now. Let's see what's got going on in wheat in Chicago. Chicago wheat's up 4.5 cents. Look at that. Caught me off guard. Dees is up 5 cents now. 8.87 1/4. That's some pretty good going right now, but it's in the middle of the day's range. We've had about a 30-cent range too. So 4.5 cents higher in March. 903.5 is last there. How about hard red wheat in Kansas City? That's up as well. Dees is 6.5 cents higher, 976.5. And we've got March 974.5. That's up 6.5 cents as well too. Spring wheat in Minneapolis. Let's get to that. A whole lot of nothing going on here, really. We're right around that equatorial line of unchanged. Dees is up 1/4, 1 tick, 967 even. Now it's unchanged. There you go. I waited long enough. Sharply unchanged. March is up 1/4 cent to 974 1/4. And let's see what cotton's doing. Let's get to our next guest analyst. Cotton's down 188 points to 83.04 in the Dees contract. There you go. Let's bring in our next guest analyst. I think that's Ted Seifried from Zaner Ag Hedge. Sounds like him. There he is. The venerable Ted Seifried. All right. 1 day post WASDE, PPI, CPI, put it all in, give it a stir. What do you got?
Yep, inflation numbers came in hotter than expected, so we had a bit of a flash crash, Scott. You know, you look at the S&P, just really, really falling apart there on that number. That crude oil was down $2, but now everything's starting to come back. You know, we get these sort of knee-jerk reactions, and then we fade them. That's what markets do. So, I mean, look at crude oil now going positive. I think that's got, you know, a bit of a positive influence on corn now, only down 2.5 cents. And beans down, you know, 8 or 9. So, yeah, you know, going back to the report yesterday, I mean, today's not a green fundamental day. Today is, you know, we're trading the inflation numbers. But the report yesterday, I don't know, you know, it was seen as a really, really bullish report for soybeans, but I don't know why the trade was looking for that 248 million bushel carryover. We talked about that on Tuesday before the report came out. Mm-hmm. I thought that number should be 200 million bushels. In fact, our number was 201 million bushels because I didn't adjust the residual by a bushel or a million bushels. But I don't know why that was a bullish shock to the market. It's the same story, the same situation that we've been talking about for a couple of months. And I don't know if it means that we need to go sharply higher. I'm worried about the issues on the river. I will admit it is a tight situation, but we already have a lot of that priced into the market. So I'm very curious to see where we go from here, Scott. The corn situation might not be quite as bullish as what we had been hoping for on that report. So we'll see where we go from there too. But like I said, the river situation is a big problem for me. It was really nice to see the export sales that we saw to China and unknown destinations in the last 2 days, a little over 1 million metric tons. But will that continue? And if it does, will we be able to send it out of the Gulf? I mean, yes, the Pacific Northwest is going to continue to do their thing, but that's not enough capacity to fulfill the orders that we have on the books for China right now.
Yeah, we had an analyst on from StoneX that said that it costs more to go from Monroe down the river to the Gulf than it does from the Gulf to China. I mean, that's huge, and that's going to cost. What's that done to basis? You hearing stories?
Yeah, no, I mean, so the thing is you've got elevators that are now filling up along the river, and so their basis is going to be precipitously falling off.
I've heard some huge. I heard huge swings, you know, from positive to negative. So,
and when you have that sort of destruction in basis, and albeit somewhat localized, although I mean, look, the river basis is a very, very important basis. But when you have that sort of destruction in basis, eventually that carries over to futures, right? And so I don't know. I think you've got a very easy argument on both sides of the equation right now, right? I mean, you can argue for a very bullish story, but you can also argue for a rather bearish story too. And that's why you have these sort of flighty, nervous markets that we have right now, Scott.
Yep. All right. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried after this. All right, welcome back. Let's jump right in and see what we've got going on in the live cattle market in Chicago. Let's see if we got any movement over there. Let's take a look. If we bring up live cattle, we'll see that there's a little bit, we're a little easier really across the board, about 40 to 45 cents lower. Deese is off by 42 cents to 148.02. We've got Feb down 42 cents to 151.70. And I'm going to call that in the middle of the day's range-ish. All right, so not a ton happening there. How about feeders? What do feeders look like? Well, they're off too. We've got Nova off just a nickel, 176.62. We're 32 cents lower in Jan to 176.57. And then finally, let's take a look at that lean hog market we often talk about. 25 cents lower in that Deese contract to 80.45, and we're 35 cents lower in Feb to 81.52. Let's bring back in Ted Seifried from Zaner Ag Hedge in Chicago. All right, we got any real strong thoughts on the livestock here, Ted?
I mean, it's a fairly quiet day, Scott, which you got to say is kind of impressive considering what's going on everywhere else. You know, we didn't see that flash crash happening in cattle or hogs like we did everywhere else. And you know, you think that's a good thing, especially for cattle, because of the amount of pressure that was happening in the stock market, at least for a little bit there. You worry, oh, what does that mean for beef demand? But we kind of shook that off, or at least they didn't even really react to that. And really, you've got a very technical market happening in the cattle right now. We are hugging our cluster of moving averages that we have right at this 148 in December. I think we're just waiting for the next shoe to drop. We're waiting for the next reason or rationale to do something, to move somewhere. And I don't know, maybe that's going to be the cash. Maybe we see that later today. So we'll have to see. For the December hogs, we're running into our 20-day moving average. It's been a very nice bounce off of lows. I think we had gotten way too low based on the China news of them releasing their stocks. We've seen export sales pretty good, although we're going to have to wait for tomorrow to see that for this week, right, because of the holiday on Monday. Overall, I still think we can go higher in hogs, but this might also be the area that we take a little bit of a pause, a little bit of a pullback from, just because you got that resistance overhead.
Once again, great content, awesome stuff. Really appreciate you coming on, Ted Seifried. Listen to what Ted, he doesn't do it for free. He's at Zaner Ag Hedge. Give him a call. Thanks for being on here this morning. We're going to bring it back to Nashville, so I can throw this back over to Suzanne.